And this big push here is new money coming into the market. So this push, right? So let me actually highlight this because this is important. So I'm going to label this push and the push we just looked at, which was down here. If I ask the simple question of which push do you think is stronger, what answer would you give me? A, being the first one, or B, the second one? I'm going to take a drink of water and then I'll break down the right answer. Okay, so the right answer is B. And it's actually a couple simple reasons why I say that. The first one, let's just break it down in terms of size of the move, right? So size of the move. You'll see here, just by a visual, you don't even have to measure it or anything, but I'll measure it just so you guys get the, the full 100% certainty what I'm telling you is true. This push, this was the length of this push. Let me put it down here. The prior push I labeled A, is only like 75% the length of push B. So push B moved significantly higher, showing that it was stronger. If price makes a push that we can consider longer, that just means it moved more price. Or we call it points or ticks or cents or dollars. So this covered more price action, which was the first sign it was stronger to me. Now, the second reason. What was its influence on the chart? What did it change? What did it signal? How does it look? Those are all the things I'm considering when I'm looking at these two pushes right here. So when I look at push A, it came after price was falling, kind of moved sideways, and then made a big push above the moving averages that had a chance to pause on the moving averages and continue bullish structure like so. That was valid. That's what we had at that given moment, and that's what we were looking to play. Now we know that once we played price a little bit further, it ended up failing, and then not too long after, push B came into the market, which was significantly bigger, right? Push B came after that same fall in price, that sideways price action, and then boom, push B has entered the market. Now, what's different about push B than push A is not only just the size of the push, but where it was coming out of. So you'll see push A, it's stuck. It's stuck in this box. It's stuck in this area of price that's just been chopping back and forth. Although it looked good, it moved above the averages with a nice impulsive candle. The area it happened in was significantly less favorable because price had already showed us prior it was struggling to move from that area. So therefore, the significance of push A meant a whole lot less to me. It should mean a whole lot less to you once you see a push like push B come into the market. A push like push B breaks past all of this sideways action and does something that push A could not do. And what was that? Well, it entered a new area of price that price was struggling to get to in this area here. And how do we know it was struggling to get there? Because at all these points, price decided to sell off. Every time it tried to make a run, and confirm accumulation. Accumulation meaning this, a break past all this sideways price action. So when we consider the size and the influence of push B, that's how we can, I guess, signal to ourselves when we're looking at technical analysis and parts of the chart that are more significant than others, is what does it actually look like? What does it signal? And what does it mean? This signaled accumulation. It means that it actually jumped to a higher area of price that it couldn't get to, which is why I find it more attractive.